Okay, so I think that's been a good couple of minutes. So hopefully you're all on and you can hear me okay. So my name is Karen Thomas. I'm a tax associate for Carpenter Box Accountants, and I work in the private client service, so dealing with a lot of landlords, a lot of self-employed people, and that sort of thing. I'm here today to talk to you about making tax digital, along with my colleague Hayden Winters, who is a digital solutions manager, and he will speak to you a bit more about the in-depths of the software that we're going to be recommending that you might want to take up for making tax digital, just to really prepare yourself ready for the changes that are coming up. So just in advance, if you have any questions, could you use the chat box for us, please? What we'll do, we'll take Q&A right at the end of the session. If we can't answer all of the questions, then we will get back to you and answer you separately after this webinar. So it should take about an hour to run through. Okay, so what are we covering today? Well, where we are at now with MTD, it's already in for some businesses. What are the options that are open to you? What's coming next? And a bit more on landlords and how they're affected specifically. So MTD, that's short for Making Tax Digital. So this is the new requirement the government have brought in for businesses to keep accounting records digitally and to report their takings, their turnover every quarter. So all this will be done via electronic submissions to HMRC. As I mentioned, this is already in place for VAT registered businesses, so they've been dealing with this for 2 years already. And it's coming in now for income tax from April 2023. So that will really affect self-employed businesses, rental businesses, partnerships, that sort of thing. Incorporated businesses won't be affected until April 2024. And really, it's all part of HMRC's strategy to become one of the world's most digitally advanced authorities. So we're not quite there yet. There's been a lot of hiccups with some of HMRC's digital accounting and some of the services they provide us, but it's getting there and it's coming in, so we need to be prepared. So all businesses who are required to be VAT registered are already with an MTD, which I mentioned before. So they've been doing it for 2 years already. Other businesses, sole traders, partnerships and rental letting businesses with turnover over £10,000 will come within these changes from April 2023. So the whole point of this is to make sure that if you fall within any of those categories, that you are ready for these changes. So any partnership businesses with a corporate partner will not come within that regime from April 23, and limited liability partnerships will also not come within that regime. What we know is that they'll come into MTD from a later date, but we don't know what it is yet. HMRC have not announced it. We're trying to keep you up to date by doing these sort of seminars and through our newsletters, and when we know any changes, we'll let you know. Now, it's worth mentioning that £10,000 turnover test applies where you've got a number of businesses. So if, for example, you think, oh, I'm okay, I've got a self-employed business and I only turn over £6,000 a year, but I've also got a rental business and I receive £5,000 rental income a year, well, you are caught, I'm afraid, because when you add those together, they come over that £10,000 limit. So both of those businesses are caught and will need to be reporting via MTD from April 2023. So what are your obligations? Well, HMRC haven't been terribly helpful and given a lot of information to taxpayers. They are relying on taxpayers' accountants to help them get it right. So that's the reason we're giving these webinars and talking to you on a regular basis. Some of the smaller accountants, I think it's fair to say, are not prepared for these changes. At Carpenter Box, we have had a lot of technology and we're digitally capable. So we've been doing a lot of this stuff already, and we have the technology to be able to support our clients and help them through it. HMRC are also relying on third parties to provide the technology. So basically, they're not providing free software. So unlike at the moment, if you do your own self-assessment tax return, you can log into your personal tax account and do your own tax return using their software. This won't happen for MTD. You need to get some software in place, which will talk to HMRC's platform in order to file your quarterly returns. So there'll be no help from HMRC in terms of the technology that you need. So what needs to be reported? Individuals will need to do 4 quarterly filings a year. So this can be done on a smartphone. It could be it's just a simple 3-line account. So some businesses, it might be very straightforward. If they have regular income and regular expenses, it could be that 3-line quarterly report might be the same for every quarter. So, for example, if you've got a rental income business and you receive £1,000 a month rent and your outgoings are roughly £500 a month, then every quarter you're going to report £3,000 with a £1,500 expense and a net profit of £1,500. That could be the same for every quarter. It might vary a little bit if you've got a bit of repairs and renewals that come in. So for some people, it's going to be very simple. For others, obviously, you've got different things happening in your business, so it might not be quite as straightforward. So the businesses that we think will be most affected will be those that are currently keeping manual records, those that have got out-of-date software, so anything that is not recognised by HMRC or the new software, that it's not going to work. Any businesses with multiple accounting systems, you need one system to keep all your records on, and any businesses that have bespoke or niche software designed for their business. It may not work. I wouldn't say it won't work, but without looking at it, it may not work. So what we know is that each business needs to make a quarterly report. So as I said, that could be just a simple 3-line report. And at the end of the year, they need to do an end of year statement, which will take into account all of the tax adjustments for that business. So those would be things like capital allowances, adjustments for private use, that sort of thing. And then following that, there'll be an annual declaration to make. So that annual declaration will probably be similar to a self-assessment tax return, where it will bring in all of your quarterly reporting, all of your other income, your investment income, pension income, anything else that you need to report, pension contribution claims, gift aid, that sort of thing, and it'll work out the final amount of tax that you need to pay. Now, what's interesting is that each business has to register separately for MTD. So if you're an individual with one self-employment business, then you've got 6 declarations to make in the year. If, however, you've got self-employment and a rental income business, then you've got 5 for each business plus your annual returns, so 11 declarations. If you've got 2 self-employment businesses and a rental business, then you've got 16 declarations to make. So the importance of this really is that each filing has a deadline, which potentially could mean that in that latter example, you've got 16 deadlines to meet. So that could be 16 penalties in a year. So it's really important that you understand how these changes will affect you and get up to date and make sure you're on top of it and using the correct software that's going to work for you. Also, I'll just mention that in terms of a rental income business, if it's a straightforward sort of passive investment where you're just renting out, on a regular contract, then that will just be, you might have a number of properties, but that will all come within one business. But if you've got a furnished holiday let, then that's treated as a separate business. So So again, you might have 2 businesses for your rental rather than 1. So what help will you get from HMRC? Well, what we do know is that they are now holding a lot more information. So they've got all sorts of information powers. They're getting information from banks about the interest that you're paid. They know about PAYE, obviously, because there's regular reporting on that. They hold all the details about your P11Ds. It could be at the moment that letting agents are reporting rental income to HMRC. So they've got that information as well. And the idea is that they'll start to pre-populate your annual return with all of the information they hold. So that could be helpful. It might make the annual return easier. But of course, what we do know is that HMRs don't always link up their records and they may not get it right. So you still need to check it, and you still need an accountant to make sure that you're getting all of your claims and all of the right reliefs that you need in order to make sure that your tax is correct. As I mentioned, HMRC is not providing any software to help you with this. They did announce at the very beginning when they were bringing MTD in that they would provide a bit of help, financial help towards the cost of the software, but they've since said that they're not going to do that anymore, but they do accept that the costs, any extra costs to you, will be tax deductible. So will it hurt? Well, hopefully with Carpenter Box, if we're your accountants, we're going to support you as much as we can through this. The reason for this seminar, as I've mentioned, is that you need to get the right software for you. It doesn't have to be through us, but we can provide it at a reasonable discount because we have access to it. HMRC have not said that they're looking for quarterly tax payments at the moment, but we suspect that may happen in the future. So it could be a case of pay as you go as you file your quarterly returns. Hopefully that'll be helpful for most businesses because they'll keep on top of their cash flow, and rather than get one big bill at the end of the year, it means that you're sort of up to date with your tax payments. And also, obviously, keeping your records up to date through using the appropriate software will keep you in control as well. So basically, we're trying to make sure that you're MTD ready when it comes round. So we'd really like our clients to think about getting the software perhaps now or a year in advance, so that they've been using it for a good length of time before MTD comes round, so that you're familiar with it and it's easier to manage. We can recommend a bookkeeper as well if you feel that it's not something that you can do. So, but I think the point is to talk to your Carpenter Box contact, and we can guide you through things. Okay, so I'm just going to talk to you a bit more about things specific to landlords. Okay, so landlords will feel that they've been hit quite hard in the last few years with the number of tax cuts that have been made. So loan interest restrictions, the wear and tear allowance has been abolished, and that's been replaced with a new, more complicated renewals basis. And of course, the lettings relief for capital gains tax has also been abolished from April 2020. So if you have a property that was once your home and you're now letting it out, there was quite a generous relief there that is now no longer available, I'm afraid. As a result of some of these changes, landlords are finding that they're actually having to fund their rental businesses. So where before perhaps they could meet the taxes out of their business, it's not the case anymore, depending on the level of their borrowing against the business. In addition to this, of course, there's the extra levy on purchase of second properties for stamp duty. So having said all that, UK property still remains a really popular investment, and we have a lot of landlords and people that we look after. So I mentioned that change to the lettings relief. It could have been quite a generous relief, up to £80,000 for jointly held properties. So the reason that I mention it is because anybody who sold their property before April 2020 would have got it, but since then you won't get it. So you need to be aware, if you've sold a property thinking that you could have claimed it and you've not reported it, then it's really important that you're aware that's no longer available. And obviously with HMRC's information powers, they're looking at changes to land registry all the time, so they are picking up on properties that are being sold. So I also just wanted to touch on capital gains tax reporting to you, because there's been a change again that came in April 2020, giving people selling UK residential property a 30-day reporting requirement. So that's within 30 days after the completion date. Now, I don't know how many of you were aware of this. Okay, so as I mentioned, from April 20, there's a new reporting requirement for disposals of UK residential property, and that report needs to be made within 30 days of completion. It's an electronic report, it has to be done online. Where there is no tax due, the reporting requirement may not apply. Now, I say may not apply because if you've got losses to claim, it's quite possible you will still need to make a report. Non-resident individuals have actually been within this regime since April 2019, but from April 20, as I say, individuals and also trustees and executors selling UK property, residential property, are within this regime. It doesn't apply to commercial property, and the report has to be made even if you're within self-assessment. There's a couple of times where you may not need to do the report if you've filed your self-assessment before you need to sell, before you need to report the capital gains tax on the sale of a property. But it comes down to timing, and to be honest, unless you've sold it in March or April, it's quite likely you're going to need and make up that report. So rather frustratingly, it doesn't work like self-assessment where agents can just do it for you. There's been a few hoops to jump through, and we've been trying to guide our clients through it. But the taxpayer needs to set up their own personal tax account and create a capital gains tax property reference before we can do anything. There's then a couple of other things we need to do, but you need to give us authority, and then we can go in and make that report for you. So as you can see, because it's a little bit messy, that 30-day deadline doesn't give us a lot of time. So if you are in the process of selling property, it's worth getting the tax calculations done as soon as you can, so that you're ready to make that report as soon as you've completed. The tax is also then paid within 30 days. And you will also be required to then duplicate that capital gain on your self-assessment. What we thought was that it would all kind of come out in the wash with the self-assessment, where you were estimating your capital gains tax because you probably don't know all of your available rate bands and allowances when you make that capital gains report. To some degree it does, but there's a few teething problems where you've overestimated your capital gains tax. So the only way to get that that overpaid CGT is to then amend the capital gains report, and that has to be done before the self-assessment is filed, and then to physically ring the revenue and ask them to repay it. So it's been a bit of a messy process, and as you can see, there's been more work for us to do as accountants and supporting people through it. In terms of executors, there's no capacity for them to file it online, so that needs to be done on paper, which makes that 30-day deadline even more difficult to meet. Okay, well, that's me. Thank you very much for listening. As I said, we will be taking questions, and we'll try and respond to the questions that you raised at the end of this session, but I'm going to hand over to Hayden now to talk to you a bit more about the software.
Excellent, thanks for that, Karen. Okay, so yeah, as I said, thanks for that, Karen. We're just going to go over some of the software solutions. So my name's Hayden. I work in our cloud and digital team here at Carpenter Box. So it's our sort of responsibility and remit to help clients with these sort of changes. So MTD has been quite a prominent area for us over the last couple of years. It kept us very busy. And certainly the self-assessment and landlord portion of this is just sort of starting to really get underway. So what we'll do is we'll just sort of talk about a little bit about cloud software in general, as often there can be a little bit of a preconception about cloud software. So what it actually means when someone mentions a cloud bit of software versus a traditional piece of software. So cloud software is based, the data is stored remotely. So that is in a location that is not physically within your office. So if you consider a desktop or a laptop, for example, where you have something stored on your hard drive, that's considered on premises or local, whereas cloud is where you upload it to an area or it's stored in an area that isn't physically around you. So it's more common than you probably do think. So I've put a couple of examples there. So social media, internet banking, anything to do with your smartphones is all considered cloud software. So Zoom, for example, all cloud, it's all hosted somewhere external. So it's quite a common, especially more recently, given COVID and the last 18 months where we are. It's very, very common. Teams, for example, is another great example. So cloud generally adopts two models, but the most common one, especially in this sort of SME market, is software as a service or a SaaS model. So a software as a service model is more akin to something like Netflix. So instead of paying for individual TV shows or movies, you'd actually be paying for a service or a subscription-based model. So this allows you to sign up quite quickly, not necessarily worry about big sort of upfront purchases. But as part of the service element, it means you get lots of updates and feature changes as well. So why would you want to use cloud software? And for those of you who already do, hopefully you can answer these questions or have seen some of these benefits. So the low cost. So as it's a software as a service model, you can start using this software straight away on a monthly subscription. As little as sort of £10-15. Naturally, software costs can become sort of £200-300 for very, very large or very complicated bits of software. But for this MTD purpose, they're very, very low cost, and you should notice there's no massive cost outlay. Coupled with this, so normally you would buy a piece of software that might cost £1,200, £1,300. Someone would come and install it, train you on how to use it. You would have to pay for updates, pay for additional training if there are new features or adjustments. So that changes simply because all of the updates are free, all of the adjustments are free. We generally recommend a little bit of training, a little bit of onboarding initially. And obviously, if there are any sort of additional large changes, retraining and restructuring those can sometimes result in additional costs. However, in the majority of cases, you simply buy it, have a little bit of training and go forward. As I mentioned, you get regular feature updates. So part of this is really prominent given the current conversation. So a lot of software providers such as Sage, Xero, QuickBooks or Free Agent will include MTD features or updates or changes. So the ability to file should be done through these software packages. And when we talked about the original Sage, as Karen mentioned, the VAT bit registered businesses, Xero and Sage and QuickBooks were very, very quick to release their HMRC integrated portals. So we didn't have to worry too much about whether or not we were going to get MTD compatible software from those providers. I put security here. There's a common concept or misconception about cloud software that it's easy to get into and easy to access and access all of your data. And the reality is it isn't as easy as it's made out to be or as it's portrayed. So the reason why this is the data is stored physically somewhere else, and within that service provider that is storing that data has a very, very large team to protect it from potential attacks. Whereas if you consider, a locally installed bit of software or documentation, you access a file that's been compromised, that's got malware on it, for example, what that will do is that will actually ransom your data and potentially access it. And you don't necessarily have, you may very well do, but you don't necessarily have the same degree of security that a cloud service provider would. So there's a different element to it. And yes, the likelihood of someone trying to attack a cloud service provider would be more. However, it's much easier to prey on people who don't necessarily have those big, strong infrastructures behind them. Coupled with this, there's a lot of additional enhancements. So for example, if you're a Xero user, you would have noticed in the last month that mandatory two-factor authentication has been implemented. And two-factor authentication helps prevent against so having a compromised password. Xero will also lock, for example, certain features, and other software starting to lock certain features until you've confirmed the account. So there's a really enhanced level of customer protection that is happening at the moment. And enhanced flexibility. So, we've obviously heard a lot over the last 18 months, 12 months about the new normal and what that looks like, remote working and such. So cloud software allows you to access this data instantly and almost any way you want, ultimately. So for example, you can access at home, log in at in your office or somewhere else on holiday if you wanted, and you can access all of your data live and as it is now. This also has a added benefit. So if you're working with your accountant and tax advisor, hopefully that's Carpenter box, but if you aren't, you're able to give your accountant access to log in and access this information for you. So we're talking about these quarterly submissions as it relates to MTD. We'd be able to log in and make that submission for you, even if you weren't able to do it on the drop of a hat's notice. So specific to landlords, we see quite a few common features or benefits behind using cloud software. So one of those is the ability to invoice and collect your rents. So you're able to raise monthly or quarterly invoices, issue those out from the software automatically, and then record or collect payments even. Now, if you have a managing agent, you can input their invoices in, but certainly it's something you can take and look at and address internally. If you've only maybe got 1 or 2 properties and you're interested in doing it yourself, if you have multiple and this is your main business, then certainly you can look at using cloud software to fully take that in-house. You're able to see and manage the amount of deposits you hold for certain customers. You're able to see for certain tenants. So you're able to see a full record of the deposits coming in, any refunds, all of their rental invoices, their current status, and you have much higher transparency over your rental property than you probably would have otherwise. So we're tracking income and expenses by property. So that not only is useful for making these MTD submissions, however, you're able to assess how well is your property doing. Now, naturally, a lot of the benefit behind rental properties is capital growth. However, if you're wanting to see, whether or not how much the property is costing you, then you can do that quite quickly and easily, rather than wait to the end of the year for your tax. You can link the cloud software up to your bank. So this allows it to basically take a view-only access of the transactions and bring them automatically into the software. Now, this does cause a bit of hesitance because people don't necessarily understand what Xero or Sage or QuickBooks has access to. And the reality is the bank puts your transactions into a little holding pen that then this cloud software provider grabs and puts into their software. So the level of encryption required to do that is equal to the bank's. So if you're comfortable and happy with the level of security in relation to logging in and accessing your bank, the ability for Xero to Sage or QuickBooks to grab that information is equal to that. And that makes sense, right? The banks wouldn't allow you to link in or to take any data from them if it wasn't secure. So you've just got to remember that it's equal standing. So there is software that can link in and certain software that does provide this internally, where you're able to actually take photographs or have emailed PDFs, and you can email them or take pictures of them straight into the software. Some software will read that automatically. So take out things like the date, the amount, any VAT, the supplier or the customer or the tenant, and will extract that information out for you. So all you're doing is going through reviewing that, making sure it all works okay, and make sure it's picked up the right fields. And then you're able to submit that and lodge it and keep it in the system. If you have multiple properties, particularly residential properties, there's other software that integrates in with accounting packages. So the accounting package makes your MTD submission. But if you're wanting to look at something that will manage all of your tenants, when to renew the leases, to generate all the documents, you're able to actually, pardon me, you're able to link that in with software and then actually have a much more controlled business environment. And this is really common where people manage their own properties, especially where they've got multiple properties that they need to keep an eye on. So I've put some other things here to consider. So there'll be a lot of Excel isn't okay. And I'd just like to raise and then point out that it is. But as you can see there, terms and conditions do apply to that. So Excel is okay to record your data, but you're going to have two problems potentially. One, are you recording the right amount of data? And are you recording it correctly and easily? And we bear in mind, this is not just, I've got this property which generates this amount of income per month. We're talking about who the tenant is, the date that the invoice or the rent was collected. We need to know if there's any VAT on that. You need to be able to put in and reconcile payments and make sure that's all okay and managed. When it comes to purchases, also, any costs that you have. If you've got a managing agent, you need to record the date their fees or commission have been deducted. Any additional costs or repairs need to be recorded. So as you can imagine, if you've got one property, it's probably manageable. If you've got multiple, it becomes a very, very complicated, very, very time-consuming exercise. The other element, which is probably the most important, is that Excel by itself will not integrate with HMRC. So you'll have to still look at a third-party provider to actually make the submission. Now, we, for example, for VAT registered businesses, have developed our own MTD bridging software. So if some of you have used that before to file VAT returns, we expect that maybe we'll do something similar for landlords. It's a little bit unclear at the moment. However, I would just like to stress that the combination of the two of them could become quite a manual and tedious exercise to do. So you've got this end of period statement. Pardon me. You've got this end of period statement to look at. Now, whilst your quarterly submissions need to be as accurate as possible, the end of period statement is a chance to make adjustments and amendments. Now, naturally, if there's a large difference, there will be an issue and probably HMRC will be concerned with that. However, because you need to make so many submissions, if you get it as accurate as possible, but there are only some slight little deviances or changes, that can be picked up in the end. However, it's just something to consider that we need to make sure that you're doing it as accurate as possible, as quick, and you can't just file zero or blank submissions. So using software will encourage best practice and record keeping. And this is really, really important for you to consider. Are you at the moment running around trying to keep everything together and finding invoices and receipts and looking through your emails? And, if you want to find out about, a particular property or, have you paid that? And you end up running around doing a lot of little things that accumulate over time. So what this software will allow you to do is ultimately encourage best practice. So that's up-to-date, accurate record keeping. And it's also making sure that any errors or any issues are picked up during the year. And that's really, really helpful. And, working with an accountant or tax advisor like Carpenter Box, what you'll be able to do is identify those issues during the year and make sure that whatever happens at the end, you're not left with a huge variance or difference. So there are certainly some benefits to that sort of transparency and collaboration. And keeping it simple. So I'm a big fan of keeping things as simple and as easy as possible. And software providers have a very large team, usually designed specifically for user experience. And that means, changing terminology to make it as logical as possible. Xero, for example, will have a team dedicated 5-person team that will sit there and track how many clicks it takes to go from one screen to another, and they'll try and minimize that. So you've got a whole team of people making something as easy as possible for you, and to make sure that you're compliant with little fuss as possible. And I think that's really important. Excel and paper records are not going to really cut it. So there are lots of benefits to you to do this. And it also means that, if you do want to go on holiday or do want to, pass it over to someone to handle and look after, all the information is there in a nice sort of neat collection. So what do we usually recommend? So hopefully some of those logos and company names will be familiar to you. So I saw a couple of questions come through about whether or not, Xero will work. So if you use Xero for a business, or Sage for a business, or QuickBooks, we don't fully know what that's going to look like yet, but the chances are you'll need an additional subscription. However, the chances that they'll release a more specific or tailored version for landlords or self-employed individuals. So we're currently working with Sage to generate basically a package, or a complete package for landlords. So Sage is probably, it's the only UK company on the list. Well, actually, I take that back. Free Agent is technically Scottish, I think. But Sage is one of the biggest and most well-known brands of software companies here. So they've got a cloud product that will link into MTD, and will help make these submissions as quick and easy as possible. We don't fully know yet what it's going to look like in terms of if you have multiple businesses where you need multiple subscriptions. So I think once these sort of software companies really sort of start to refine what that looks like, we'll be in a better position to kind of help assess that. Because we need to obviously keep it as simple as possible, but also making sure you're making the necessary amount of submissions. So I've got a couple of screen grabs here. Again, it's sort of generic data for you, but this, in my opinion, looks a lot nicer than Excel, and it has a lot more data on it. Again, if I was to accidentally drop my computer in a lake, or I was to spill a drink on it, or do anything like that, I can go and log into a completely new computer, and everything's going to be kept and saved there. So backups and things, or additional storage, or saving things somewhere is really a thing of the past. So we can see on our screenshot on the left, for example, we can see our sort of rental collected. We can see our expenses. We can click into certain things, run reports on them. We've got our banks connected up here. On the right-hand side, we've got a little bit of an illustration here. Again, we can see our VAT return period. So we've got it ends in 6 days. We can see an assessment of the VAT return. So we've got a whole lot of data, much more quickly accessible to you and also to us. I'd also like to point out that HMRC are not going to access any of the underlying data that exists within these software packages. So you don't necessarily have to worry about, are they going to see the names of my tenants, or are they going to see this underlying amount, or how much money I'm making right now, or how much is in there? The answer is no. So they're not going to see any of that data. It's just going to be the numbers that are submitted as part of these quarterly returns. Now that could change, but I honestly very much doubt that. Even if they did have access to it, it would take a very, very complicated to set that up so HMRC could see that. And at the rate that HMRC normally rolls these things out, I wouldn't necessarily be worried about that for quite a long time. So where do you go from here? It's probably one of the big questions. So we do a couple of things for you, or can do a couple of things for you. We can conduct what we call a systems review. So a systems review is effectively an assessment of your business, how you're working, and we're able to determine the software package that's going to be the easiest for you, that will get the most functionality, and also may give you an opportunity to do something better or more efficient than you have done before. So this isn't necessarily required for all businesses, but it's certainly, if you're kind of wanting a general review of it, just to understand, are there any ways that we can make this easier? That's something that we can look at. We can also implement and train you on how to use the software. So, we're not going to set you up with a license, invite you into it, and then leave you to it. So we've got a team here that's dedicated to help support and onboard our clients on these software packages. We provide ongoing support, so we can help you make sure that, if anything's gone wrong, you're not sure about something, we can make sure you're supported and encouraged and built into this process. And lastly, bookkeeping. So as Karen mentioned, we have a bookkeeping team here that can help keep your data and make your submissions for you. We can get as involved or as little as involved as you would like. So if that's something you've heard all this today, and you've said, you know what, this is just too much for me to worry about, there is certainly support that we can provide from that, and the service we can provide on that. So thank you everyone for attending today. So we're going to stay around for a couple of questions. I can see there's a few sitting in the chat box. So a recording is going to be available for this and will be provided. So if you'd like to watch this again, by all means do so. But yeah, Karen, if you'd like to, maybe we go through some of these questions. Thank you again, everyone.
There are a couple of questions sitting there that I couldn't answer, Aidan, on costs of software. One of them, I'm not sure I understand actually, from Costa, says, can I keep the MTD software process independent of how I currently manage my business? In other words, can I continue to record my transactions as usual and simply add the MTD to comply as I need? So they need some software, don't they?
In principle, you'd need to keep a digital records of some variety, and that would probably be Excel at a bare minimum. You just need to be careful that what you're recording in the Excel is in fact precisely what you need. So you just need to make sure that that's in there, and then you need to make sure you're getting a third-party submission, so a piece of bridging software that will link into HMRC. So yeah, it's possible to do so, but I certainly would recommend looking at some of the alternatives just to make sure that it is the best approach, because you can end up over-engineering sometimes what software could do quite quickly for you.
The next question from Sean is, a small landlord with 3 properties, so I'm assuming these are all the same kind of rental. How much will the software cost per month? Do we have some rough estimates?
Yeah, so it really depends. I know that's a classic answer, but it will depend exactly on what sort of package you're choosing. I suspect that some of the software companies will in fact alter or adjust how that submission and that license and subscription plan works. At the moment, for example, you've got a single subscription per limited company. So we don't know whether or not, for example, an individual that owns 3 properties will need 3 separate subscriptions or one subscription that covers that individual. In principle, it will be 3 as it currently stands. But I suspect that they'll release a landlord or a property subscription plan, which will be cheaper, as if you consider things like inventory or accounts receivable. Those things probably aren't going to be necessary for every business. So we don't fully know yet, but based on that, I would assume it's going to be individual subscriptions. But fingers crossed that they start to they make that a bit easier. But as Karen said, those costs are tax deductible as well.
Do we know what they might be? Have we got any examples?
So
I know they're a bit cheaper through Carpenter Box, aren't they? If we've got existing clients using it, but I think outside that,
a standard, a suitable Xero subscription, for example, would be I think £8 per month, because that doesn't require all the business settings. So it's a very, very base version of Xero, but it does have a few limitations on it. So again, it kind of depends on the properties, but I'd be expecting kind of between maybe 8 and about £13-14, 15 quid maybe for those.
So Inga says she currently uses Free Agent and Xero, but would like a simple separate cloud solution for her rental property, as she only has 1 property. Are banks providing anything? Do we know?
So for example, NatWest and RBS provide a free agent subscription if you bank with them, as they have purchased Free Agent. If you're with Xero, they won't. Some banks do provide, some of the more high-end banks do provide software at a cheaper or discounted rate as well, but it's not very common. I would expect that a lot of software developers, when it gets closer to the time, will actually release a cheaper version for landlords. And also, they wouldn't surprise me if there are other variants of software designed for this specific purpose. So again, if we consider that, yes, there's going to be really, really cheap alternatives available. However, if we consider the security, the product updates, the reliability and the server capacity, certainly one of the biggest software providers, I would say I'd hedge my bets on a little bit more personally, just because I want that sort of long-term liability, longevity, I suppose, and security. How will the software handle grossing up net rent received from agent after deductions? So it depends on the way that this works. So you can create the invoice as gross and then just simply include the deductions as negative line items. Some software will help extract that automatically out. So there's simple sort of little bookkeeping processes that will make that quite nice and quick for you. You can also set up things like rules, so everything coming in every month or quarter will automatically be grossed up and deducted. So there's certainly a way to do that. Okay, so maybe for those who have no idea where to start, our email addresses are on there, or if anyone's still confused, our email addresses are on there. So by all means, feel free to reach out. And for those who need help as well, you've got our email addresses there, or your regular Carpenter box contact. So if you're a client of ours, then great. Otherwise, feel free to come on board. But no doubt your accountant and tax advisors can help you with this change as well.
Yeah. Yes. We've still got a little way to go, haven't we? We've got 18 months to go to get used to these changes. So if you need our help, I think you've got our details there on the screen. And as I say, you'll be sent a copy of the recording if you need it. Okay. Otherwise, thank you very much for listening. You've got anything else to add, Hayden?
There's a couple more questions. I'm just going to go and answer those now. So Sean, is there any information to HMRC without any software? No, so you will need software to do it. It doesn't need to be a full software package. It will just need to be something that will make the submission, but software will need to be used to make that submission. You'll find that they won't release or won't have the ability to file it directly with HMRC either. It will have to be done through a third party and cost us. So we're working with Sage to basically develop a package for our clients. So a cost that's reasonable, and also a training package and onboarding package to make it as cost effective for everyone as possible. So I've got a call with them next week to sort of finalize the costings. So certainly if that's something that you're interested in, please feel free to email me so we can make sure that we look at that. And that should be probably about £12 a month. But we're making sure that we get that as cost effective as possible for you. Okay, perfect. If there's anything else, feel free to reach out to either one of us. I think we've answered everything. But otherwise, thank you for coming and enjoy the rest of your weeks.